The electric vehicle market is facing some big challenges. Sales are slowing down, and hybrids and plug-in hybrids are proving to be stronger competitors than expected. Why is this happening? With these issues, could the market see a decline in EV sales? And what does this mean for investors and automakers? Well, to know all about this, you have to stay tuned until the end. Sales for EVs are hitting a rough patch worldwide, and it looks like hybrids and plug-in hybrids are proving to be more competitive than initially thought. According to Goldman Sachs research analyst Kota Yuzawa, the slowdown in EV sales is making their less optimistic prediction more likely. However, Yuzawa also sees a silver lining. There are investment opportunities in companies with strong financials and diverse vehicle lineups that include various types of powertrains. He believes that despite the current downturn, the demand for EVs will likely grow over time as efforts toward carbon neutrality continue. So, what's causing these troubles for the EV market? There are three major factors at play. First, there's growing concern about the high upfront cost of EVs. Recently, used EV prices have dropped significantly in the UK, which is making new EVs seem less appealing. When people see lower prices for used EVs, they might question whether investing in a new EV is worth it. Second, the uncertainty surrounding upcoming elections has made it harder to predict changes in government policies related to the EV industry. Political changes can affect subsidies, regulations, and other factors that impact EV sales. Without clear guidance on future policies, both consumers and manufacturers are feeling unsure about the market's direction. Third, the shortage of rapid charging stations is becoming a real issue. As more people start using EVs, the demand for charging infrastructure is increasing, but the current setup isn't keeping pace. Automakers are reporting that issues with driving range and limited charging options are becoming significant concerns for potential buyers. This lack of reliable and accessible charging stations might make people think twice before buying an EV. These challenges are creating headwinds for the EV market. The combination of high initial cost, uncertain policy environments, and insufficient charging infrastructure is slowing down the growth of EV sales. Despite these difficulties, there is still hope for the future. The push for carbon neutrality and technological advancements in the industry could eventually overcome these obstacles. Investors and automakers need to navigate these tough times carefully, focusing on companies with strong financial positions and diverse vehicle offerings to weather the current storm and seize future opportunities. As the market adapts and evolves, it'll be crucial for stakeholders to keep an eye on these issues and their impact on the automotive industry. While the current slowdown is significant, it's also part of a larger shift that could lead to more sustainable and efficient transportation solutions in the long run. The slowdown in EV sales is making analysts reconsider their projections for 2024. Originally, there was a strong expectation for significant growth in EV sales. However, current trends suggest that this might not materialize as anticipated. Analysts had initially forecasted a 21% increase in EV sales year over year. However, the ongoing challenges are pushing them to also consider a more pessimistic scenario where EV sales could decline by 2%. This decline, if it occurs, could lead to an oversupply within the EV market, affecting manufacturers and suppliers across the board. The market is reacting to several issues that are impacting these forecasts, and the possibility of a negative shift in EV sales is becoming increasingly likely. One major factor influencing this change is the high initial cost of EVs compared to their used counterparts. As more used EVs enter the market, their prices have started to drop. This price decrease has made new EVs seem less attractive to potential buyers who are considering the cost-effectiveness of purchasing a used vehicle instead. In addition to this, there's growing concern about the uncertainty surrounding government policies related to EVs. Upcoming elections and potential changes in regulations have created an environment where future policy decisions are unclear. This uncertainty can lead to hesitation among consumers and businesses alike, impacting their willingness to invest in new EVs. Another significant issue affecting the EV market is the shortage of rapid charging infrastructure. As more people adopt EVs, the need for charging stations increases. However, the current infrastructure is struggling to keep up with this demand. Automakers have reported that concerns about driving range and the availability of charging stations are becoming more pronounced. These concerns can make potential buyers hesitant, as they may worry about the practicality of owning an EV without reliable charging options. The shortage of charging stations is a tangible problem that could discourage some consumers from making the switch to electric vehicles. Despite these challenges, hybrid vehicles and plug-in hybrids are seeing a rise in sales. Over the past few months, the growth rate for hybrids has outpaced that of EVs, particularly in markets like the United States. This trend suggests that global sales of hybrid EVs could exceed previous estimates by 1 to 2 million units. Hybrid vehicles are often viewed as a transitional technology, bridging the gap between traditional gasoline engines and fully electric vehicles. Their increasing popularity highlights their role in reducing carbon emissions while still delivering strong performance and economic benefits. One of the key advantages of HEVs is their quicker return on investment compared to EVs. The payback period for hybrid electric vehicles, which is the time it takes for the fuel savings to cover the initial cost of the vehicle, is estimated to be just over 3 years. This relatively short payback period makes hybrids an attractive option for consumers looking to save money on fuel cost. Additionally, hybrids have been around since 1997, and their long history in the market has built confidence in their reliability and resale value. This track record contributes to their continued appeal. In addition to economic benefits, HEVs offer better performance than traditional gasoline vehicles. They can provide higher horsepower, which can be particularly useful for drivers who need extra power for tasks like merging onto highways or navigating steep inclines. As gasoline engines become smaller and less powerful, HEVs offer a compelling alternative by delivering strong acceleration and overall performance. This performance aspect is likely to become more important as consumers look for vehicles that can meet their driving needs effectively. Looking toward the future, if the cost of EVs decreases significantly by 2030, the advantages of electric vehicles may become more evident again. Advances in technology and increased production could drive down prices, making EVs more accessible and appealing to a broader range of consumers. This potential shift could bring EVs back into the spotlight as a more attractive option compared to hybrids. For now, the hybrid market is thriving, showing that while the EV industry faces challenges, there's still significant demand for vehicles that offer a balance of performance, efficiency, and cost savings. Do you think EV should change its features? What strategies can the EV market use to raise its own market? Do let us know about your views in the comments section below. And for more such amazing videos, please subscribe to our channel. Thank you so much for watching, and we'll see you during the next video.